Hey, welcome back everyone to my world of stocks. Today we're talking about Tyson Foods, who just got crushed on earnings, falling around 10% in a single day, and the stock is down much more than that from the top two. But in today's video, I'm going to give you 5 really quick reasons for why I'm buying the stock on the dip as one of my favorite dividend payers of the year. So hit that like button if you want more videos like this showing stock opportunities whenever I come across them. With that said, let's go ahead and jump straight into it. Now, reason number 1 is that while earnings were bad, I actually think that Tyson as a company is performing really well given the circumstance. Now, sales did miss estimates, but it was due to a $340 million set aside for an antitrust settlement. Without that, this actually marked the 4th quarter in a row of revenue growth despite horrible macro conditions that we'll touch on in just a second. EPS also beat estimates while rising 48% year over year, with also improving margins and operating income. Now, I'm not exactly sure why the sales would rise if they're putting money aside for an antitrust settlement, but that's basically what management said. So I don't know. We're just kind of taking it at face value. The more important part of it, though, is that the only area that saw negative operating income was in beef. Everything else was actually very strong, but beef is where they're really seeing the bigger issues. And I'll say this very clearly to you right now that the macro conditions for beef right now that for which Tyson is operating in, it has nothing to do with Tyson as a company themselves or how the company is being run by management. And that's reason number 2, that this is a macro issue rather than a company specific one where Tyson would be making mistakes themselves. That's not the case. With management calling it really the most challenging market conditions that they've ever seen. And this is an environment really where they've had to deal with multiple issues on multiple fronts, where you not only have inflation, obviously, but it's also raising the price of feed. This has been an ongoing issue for years now. And anytime that you have the price of feed going up, that's going to raise your input costs, raise your operating expenses. It's going to hurt your margins. So that's already been something very challenging for them. But you also have the new threat of tariffs, which adds even more uncertainty to the macro environment. And on top of all of it, we're currently going through a massive cattle shortage. In fact, we haven't seen these low of levels of cattle since the 1950s, which is kind of crazy. I'm sorry, but there's just nothing really that Tyson can do about that when they simply can't get their hands on enough cattle to produce the beef. And the good news, though, is that it's a very clear kind of cyclical, short-term issue that should eventually get corrected. We've been through these types of things before. I see the main cause of these shortages, at least according to experts, has mostly been related to severe droughts and environmental disasters, helping send the price of beef soaring and thus weakening demand. Now, on the bright side, Tyson has a very strong chicken and pork business that does help to, kind of offset some of that, but it's still a big enough issue to where it's hurting their margins. Obviously, beef is going to be, it's just extremely important for them. Now, it's something that I feel should correct itself over time, though. And in fact, we know that farmers are already taking many steps to fix this. In fact, they're stocking up on heifers for this very reason. Now, the average person might not know very much about the beef supply chain, but basically what happens is that when cattle supply is running low for whatever factors and reasons, going on macro-wise, well, farmers, what they have to do is stock up on what are called heifers. These are young female cows that are specifically chosen for their strong genetics, health, and reproductive capabilities. They're then raised separately from the main herd, with the main objective being to replace and fill up the herd with new cattle. Unfortunately, though, it's a process that can take years. And although ranchers are very serious about it right now, I personally haven't really seen them ramp up this process until kind of the past couple years. So it's something that personally, my guess, I think we'll have to wait until the late 2020s, maybe going into the 2030s until the market fully recovers here for cattle. Now, the good news, though, is that demand for beef and poultry will likely always be here, as demand has always increased over time as world populations grow, with analysts projecting at least a low single-digit growth rate in the coming years too, which is the same growth that Tyson typically sees as the #1 market share leader in America and #2 across the entire globe. So they're very dominant, and they also have some of the strongest, most popular brands across the space. Which, by the way, when you look at what trends analysts predict will see the most growth, they point to things like frozen prepared meals and air fryer ready meats that are very convenient for today's consumers that are more on the go and have less time. And they also point to things like plant-based alternatives too for vegetarians and growing, trends in those areas too. Well, Tyson has already doubled down on all of these market trends greatly. In fact, if you go to any frozen food section of your local grocery store, you'll find tons of their different products sold directly from Tyson for those specific areas of the market, many of which have, the convenient features of being like air fryer ready, or they might be selling, various burgers and hot dogs that are plant-based too, make it very easy for vegetarians to live the lifestyle that they choose to. And so in all, we're really just in the kind of waiting phase more so than anything else. As we all know that over time, tariffs will come down, inflation will come down, feed prices will come down, interest rates, at some point got to fall, and cattle stock will rise. And when all of that happens, it'll be the opposite kind of perfect storm where right now it's sinking Tyson, but in the future, I think it'll help it soar. And the good news is reason #3 is that while we wait for that, future to kind of take shape, is that I get a stock price here for a world leader that has already crashed to absurdly low levels, with the stock having lost close to half of its entire value from the top. It is literally sitting at one of the lowest levels of the past decade. By the way, while we have this chart up here, it should also be noted just how incredibly cyclical this stock is, completely, correlating with macro trends where it experiences very large swings both up and down. Well, as a long-term minded investor, these types of stocks can actually be some of the best to take advantage of because of all the low price points, the incredible buying opportunities that sets up whenever the macro environment drags a stock down like this, with huge potential to the upside that will very likely come in the future as long as the company is well run, which I believe this is. And that brings me to reason #4. And that's that I also get to buy this world leader for now an insanely low valuation. I mean, we're talking not just a PEG ratio below 1, but it's also 71% cheaper than the sector. That's an incredibly deep value for such a great company like this. But as if that wasn't good, enough for an investor, it also comes with a very attractive dividend too. That's reason #5, as the stock crash has now raised the dividend yield up to almost 3.6%, which is also among the highest levels that it's ever been. In fact, it's even higher today than it was during the Great Recession. That's definitely saying something. So, in my opinion, it just can't really stay at these levels. The stock price is really too low and the dividend yield is too high. History tells us that this will eventually get corrected. And again, because I'm a long-term minded investor, I have the patience to invest now and collect that dividend while I wait for the macro environment to improve, make it easier for Tyson to operate in. Now, I think the bears personally are really kind of missing the point here, and that's that Tyson as a company is not doing anything wrong and should therefore not be this cheap, which I think the CEO summarized it pretty well here in a previous earnings where he said, quote, "We've been through market cycles before, and I'm confident that we have the right strategy, seasoned leadership, and team members in place to emerge stronger from this one too." Now, I feel the same way about it. I could be wrong, but I don't think I will be. We'll see though. Anyway, for now, I'm a buyer, and I'd love to hear what you all have to say about this one down below. So drop your comments down there, let me know your thoughts, and I will catch you in the next one. All right, take care, my friends. Bye-bye.